Stocks are about to rally as traders put in a floor. I'm your host, Steve Van Metre, and thanks for joining me for part one of this special holiday edition of the Sunday Chart Show, where we take a look at the technicals and momentum of the S&P 500, NASDAQ 100, Russell 2000, and junk bonds. Let's kick it off with the S&P 500, where I think a big floor is being put in stocks, and I want to take a look at how momentum's building and breadth is building. We're going to start off with the breadth indicator, the percentage of S&P 500 stocks above their 50-day moving average, which is a mere 25.86%. Now, this is pretty low historically, suggesting that, of course, stocks are oversold. That's what traders are looking for, to put in a bottom and get a big bear market rally building. And what do we want to see with the breadth indicator is when a stock or an index is above its 50-day moving average, is considered bullish. When it's below, it's bearish. So when you get a big position below, well, traders are going to look at that and say, let's put a bottom in, let's drive prices higher. And we want to see participation. So when you see the breadth indicator rising here, you want to see stocks rising in a similar fashion. So what do you notice? There's already a short-term divergence here as breadth is building, as more stocks inside the S&P 500 are crossing positive upwards through their 50-day moving average. Meanwhile, prices aren't moving all that higher, and that's a positive sign. Now let's zoom out a little bit to the percentage of S&P 500 stocks above their 200-day moving average. Notably, it's about the exact same percentage. I think it is the same percentage, telling us that things are pretty bearish, because when a stock is below its 50-day moving average, or in this case an index, it's considered to be in a bear market. So what we see is a mere 26% of the S&P 500 is in a bull market. Again, historically low levels here. We note again that breadth is building. Stocks are not following. Positive sign. How about historically? Well, we can just see that this whole move down has just been brutal. Breadth has been coming down. Price has been following it lower. And what are traders looking for? They're saying, look, hey, historically, this has been a good time to buy. And they're going to continue to buy, even though the Fed is pulling liquidity out of the markets. What are they looking for? A move higher, any move higher, maybe anywhere up to the 50%, ideally way back up here to 90%. Is that going to happen? Well, I don't think we're going to see that quite a big of a move. Now let's look at the momentum indicators. Let's start out with a relative strength indicator, or RSI, looking for a number of 40 or higher to tell you that momentum is positive. And notably, we've seen momentum get going here. In fact, momentum remains positive, but price is starting to slow. But we want to see momentum leading price higher. We're seeing that. That's a good sign. How about the MACD, the moving average convergence divergence strategy, or just simple crossover strategy, where you're looking for the MACD, the black line, to make a positive cross to the signal line. On my charts here is red, so you have a positive cross, momentum building there. And that tells us what we already know from Momentum Timer Pro, which takes a look at three signals. It looks at the RSI with a 40 or higher, the positive cross on the MACD, its own internal signal. If two of the three confirm a buy signal, you get a buy on this 10-day running daily count. And you've seen 10 or 4 days in a row where it's had buy signals. But notably, I want you to understand, this is a 1 month, 3 month, and 6 month signals telling you it's broadly in a downtrend. The way you actually read this report is usually when you get buy signals in a downtrend, your better move is to short, not to buy. But nevertheless, keep your stops tight. Momentum Time Pro remains free. You can sign up. There's a link in the corner and the description below. And big news is coming for it. Let's take a look at the bigger signals here, the broader signals. Price on the moving averages heading lower, momentum to the downside. All we see here is unchanged from last week. The S&P above its 9-day moving average. So when you see something below all its moving average, you're looking for a counter rally higher. Let's take a look at the charts. And what do we see? Of course, now we've got the volume profile turned on here. As you can see, indicated by this red bar, you can do that in your charts. And that's why I want to point out the S&P is in a downtrend. And until the bottom is in, we won't know that till after the fact, you have to treat it as a downtrend. And what Momentum Timer Pro is really good at finding in downtrends is it'll pick up these move higher, and then you kind of almost know you should short and just sit on it, because it's probably going to reverse. But let's zoom in a little bit. If we go to the 90-day, notice how volume profile is above. Sellers are above. But now let's look at the 30-day, and what do we see? Buyers coming in below. You have kind of a left shoulder head, right shoulder pattern here, suggesting that price is going to move higher. How about on the 10-day? What do you see? Buyers below. Excellent sign for price to move higher. Where do I think this could go? Well, first move, you're looking at 390 here in this range on SPY. Ideally, you break through this supply zone. And I want to point out, all we've done is hit supply zone. If you're an Elliott Wave trader, you're really trading supply zones. Got down supply zone, found buyers, came up, got rejected here, sold sellers in the supply zone, came back down. Buyers below. Now they're going to make a move higher, try to flush out these sellers. Ideally, a move back up to the 100-day moving average at 417 would be a big move for the bulls in this bear market. All right, let's take a look at the NASDAQ 100. A similar story. We see breadth building, percentage of NASDAQ 100 stocks above their 50-day moving average at 30. We see momentum building here. We see breadth building, participation building, price not following. So it's a good sign for higher prices. How about the percentage of NASDAQ 100 stocks above their 200-day moving average? Well, that is down to about 18%, which is an improvement with just under 10. Buyers are going to love this, suggesting that most of the NASDAQ is in a bear market. All it will take is some sort of news that to drive the market higher. Maybe belief that the Fed will capitulate or something. But again, breadth moving higher, prices not. How about the big picture trend? You get down to these deeply oversold levels in breadth, and buyers are going to come in saying it can't get any worse. Unless it can. How about we look at the momentum indicators? See the RSI buildings over 40. Momentum building, price not following, price going sideways here. Momentum still picking up steam. That is a positive sign to send price higher. How about the MACD? You have a nice positive cross. Price is still flat. Again, momentum's building here. People want to buy this. How about Momentum Timer Pro? It's got 5 consecutive buy signals on that. Again, keep in mind it's in a downtrend. In a downtrend, these buy signals actually are giving you an early warning of to go short, believe it or not long. How about we look at the bigger picture, and it is red. Price on all the moving averages head lower. Momentum on the moving averages to the downside. Below all the key moving averages. Momentum on all the longer term screens is down. Let's take a look at the price chart and see where this could go. And notably, again, all we're doing is moving through supply zones. We came down to the supply zone down here where buyers were at. We noted because buyers were here before. We see the volume peaking out here. That's how you can set your charts. Look for these chunks of volume. And buyers sent prices up into the supply zone very quickly. And what did they find? They found sellers, drove it down to the top of that supply zone. Buyers came in at a higher level. That's an excellent sign. Tells you that buyers are going to want to move this into this 290 to 293, 294 range. And ideally, again, drive this straight through there, flush those sellers out, get price up to the 316, maybe get some of those computer models to flip and hit that 100-day moving average coming down. I think that is the next supply zone that you should be targeting to the upside. If you believe there's a big bear market rally coming, that's where it's likely headed. Now let's take a look at small caps, and we're seeing breadth continue to move higher on the small caps here with just a little bit of a pullback sitting at 31.5%. So again, breadth came down here to very low levels, was sitting just above 10%. Buyers came in again as price went down. So we see breadth building. Price is just following nicely. So this is good, showing that the buyers are participating and the stocks are participating higher with this. How about Russell 2000 above his 200-day moving average? Still very low. Most of the small caps here are in a bear market, sitting at 17%. But notably, this is slowly building higher and going along with price. Again, what you want to see. And of course, when you get to these battered, beaten up levels of breadth, buyers are going to come in. They think the economy is maybe perhaps better than it is. Or again, the Fed changes its mind. How about the RSI? It's over 40. We notice that momentum is building and price is slowly coming along with it. That's a good sign. How about the MACD? You got a positive cross, but not really much follow through here. That's okay. That can turn higher and take price with it. So keep an eye on the MACD and see where that goes. How about Momentum Timer Pro? 4 consecutive buy signals. Again, keep in mind, still in a downtrend, and that means more likely to the short side than it does the upside. Price on all the moving average still had lower, momentum lower, only above its 9-day moving average. Everything looks potentially right for a reversal, but it has for a while, and that's the problem. Haven't really got it. You notice that before I was pretty bullish here as I hoped there would be a big rally higher up to the supply zone. Didn't happen. Hit the 50-day moving average, got rejected. Hopefully those of you that were trading this kept your stops tight. Again, in a downtrend, if you're trading the bull side, you've got to keep your stops tight. And if you're trading the downside, then you just got to let it run out along, let some string out and let it turn. What did we see? It came down to the supply zone. Barreled off the 21-day moving average, got rejected. Back down in the supply zone, the high side of it, buyers came in. What does that tell you? A run to the 50-day moving average, potentially, ideally, the 100-day moving average is what your targets are next. So 180 and then up to this 190, 191 level. And in a beautiful storm for buyers who are looking for a bear market rally, you get up here to 210. I just don't think that's in the cards as of yet, but look for price here again to head higher. And what do we see? Of course, when we zoom in on this, we see notably all of this buyers below. The same with the NASDAQ. We didn't look at that, but look here, 10-day volume profile, buyers below. So again, turn the volume profile on. You see the buyers below there. That is solid signs that there is support to send prices higher. Now, junk bonds, which are pretty junky. We'll take a look at this momentum now above 40, sitting at 42, slowly building as price goes sideways. Perhaps, a lot of caution here in the market. MACD just starting a positive cross, but not a lot of enthusiasm there. And of course, this thing remains red, as it should, because what do you see in this big picture is nothing pretty. You see this downward chart, this big waterfall. Some people are getting excited that double bottom. Look, major double bottoms do not occur that close together. And if there's any doubt, look at the 10-day volume profile. Sellers have been above this. Prices come up here, get rejected. Price comes up, get rejected. The big picture here is, why are people buying this? Well, they're buying it for one very simple reason. They're saying this can't get any worse because it's already at levels that are consistent with perhaps near bottoms of prior recessions, only suggesting that if things do get worse, there's going to be a massive blowout in junk bond yields, and that is going to topple a lot of companies as they can't afford the new servicing costs on their debt. So major warning signs need this to turn around to bring the equity markets higher. But otherwise, look for bear market rally here, hopefully beginning soon. And with that, hey, appreciate you watching. Appreciate you being fans. We'll be back here shortly for part 2 of the Sunday Chart Show. Enjoy your holiday weekend. I'm Steve Van Metre. Thanks for watching. Bye now.